Awesome.
Welcome.
Thank you.
Good morning, everyone. Welcome. After this speech, I just feel humble, but we need to continue, and I think it really stresses the conversation that we have today. And actually, the urgency is, I think, pretty clear, and now it's about what can we do. You voluntarily went to a session about a negative topic, so thank you. I just want to point out there is the exit, but hopefully you're brave enough to stay here and dare to go in with this conversation. And luckily I'm here today with a bunch of experts, so definitely we won't do this alone. Hopefully we have a fruitful discussion, also allowed to touch when possible. I'd like to introduce to you Esther Vitorino Fullicki. She's the, at Van Landschot Kempen, the manager of sustainability and impact. Great to have you here. And she always looks at things from the bright side, and she's quite heavily invested in the future with 2 children, you told me. So thank you. Actually, the whole panel is, I think, on this perspective, quite heavily invested in the future. Remco van Frank Wagemans, Achmea Investment Management, doing lots of engagement work. I think he spoke on behalf of you, of a quite large group in this audience already with companies, and your first engagement started when you were 9, so he's quite invested in this as well. Mariette, my former colleague, good to see you again at ASN Impact Investors. She has a long track record on sustainable investing and practice what you preach, because she has a beautiful biodiverse garden and she inspires other people by inviting them and open it sometimes for the public. And last but not least, Remco from Montfort from Invest NL. Great to be here and talk about what you just indicated, public and private partnerships working together. I know you really, one of your records to fame is you're the creator of the name Invest NL, and another thing is you like to collect old records, which is also very sustainable. My name is Martin Heijn. I work for quite a long time in sustainable investing and collaborate with sustainable initiatives. So the good news is, I thought you all having signs with how many people were, what's your percentage of impact investing, and there's a lot of signs with 30, and I think you're too modest. Everybody could pick up and say 100, in my opinion, because we're all impact investors. But sometimes we don't like that impact, so we don't call it that way. That's the bad news. So let's go to the first step on what's impact. And Frank, actually, when you start about impact, you start reading a CSR report. What's the use of a CSR report?
Now, we were discussing beforehand in our team, in our active ownership team, we have a sort of joke that if you feel depressed because of climate, because of human rights, you should read CSR reports. Because if you read CSR reports, everything is perfect. Companies are going to solve the climate crisis. Human rights, taken care of. All the employees are doing fantastic things. All the world's problems are going to be solved. And we know that's not the case. So for some reason, if you look to annual reports of companies, it's quite a happy picture, and you don't see the negative externalities. We know they exist, but we don't see them. And of course, we can laugh about what companies do and that all these reports are nice and shiny. But I think the key question is, what do we do as investors? Do we also provide that more full picture about also the negative impacts we have? I think we don't do that always. I think we should do more, because I think the positive thing is that when I read a CSR report of a company that is open on its negative externalities, how it's addressing them, it also builds trust. I trust a company that is open about its negative externalities, and I think the same goes for investors.
Thank you. And Mariette, you work for an investor which even has the name impact in its name. Could you elaborate a bit on this?
Yeah, and also reflecting on what Frank just said. we are impact investors, and we really try to understand what investments we own, where we are invested in. So know what you own is really key to us. That's where it starts. And we know with investing in companies, you have a negative impact, because that's most of the time the case. That's also why we started already in 2007 to measure the negative impact of our investments on climate. And later on, we also started doing that for biodiversity, for all our investments. We also publish it in our annual reports. And the measurement is not perfect, and specifically the data not. But that didn't stop us from trying to understand what the negative impact of our investments are. So that it's not perfect should not withhold you from starting. The perfect should not be the enemy of the good. So really start with trying to understand your investments and trying to understand the negative impact, even though it's not perfect yet. And it brought us a lot. Since 2007, for example, when we started calculating the impact of our investments on climate, the methodology has evolved tremendously, and it also really brought us as an investor a lot of information. So we could better understand our investments, better understand really make our strategy aligned with being more, trying to get also a positive impact on, for example, climate and biodiversity. So find different kind of investment opportunities.
Yeah, if I made an extra question on that one, because usually we tend to be quite, we don't want to claim things until we've achieved them, but that went a bit different. So I think in 2007 there was a climate target of ASN and be climate neutral 2030, if I recall.
Yeah,
but it went different.
Yeah, the objective, we introduced that a little bit later, but we want to have a positive impact on both climate and biodiversity in 2030 with all our investments. And it's a huge challenge. And because we started calculating that and setting ourselves the objective, even though we didn't know yet how to realize it, it helped us to innovate, and it helped us to look for different kind of investments. So we are now in the beginning of making progress. We find different kind of investments that are working more in balance with nature, and that's really what we need. And that's also a great example. We heard it before, that there are investments that can, for example, help how do you say it, the desert, land become more like a desert and turn it around. You have, for example, a listed company as well, Desert Control, that really is focusing on that. So there are opportunities.
And I think this really connects with your story about how to address this bigger picture. And of course, you have a different perspective in the investment landscape. Could you elaborate a bit on this?
Certainly, thank you for that. As you said, we are all impact investors. Every single investment has an impact. If you're not managing it, it's likely negative. So it's just to put in perspective that it's something we need to take accountability for. And indeed, not all data points are perfect and mature. And I agree, let's not allow the perfect get in the way of good enough. And at the same time, one thing we often in the investment industry underestimate is the importance of intentionality and why you do what you do, what's your North Star, what are you trying to achieve. So it's really going back to the intrinsic motivation. Again, listening to Ms. Dileka and thinking about Nelson Mandela's unparalleled leadership, it's not because the environment was conducive. It's because of his inner force and his inner strength. And I think that's a reminder for us that yes, we need to report, yes, we need to improve data, there's great opportunities and data is our friend, but data should assist our intentionality. So my invitation is, and I think for all of us impact investors, we are very keen on what's the theory of change, what are you trying to achieve? So really going back to the North Star, and then I'm not saying use the data to prove your theory of change, but much more be focused on where you're heading to. And sometimes you need to take a side step, but don't worry about that, as long as you know where you're going to.
Thank you. And I think it is inspiring because we tend to lose sometimes on all the data of today and how to tweak it and for the next month, but it's about the bigger picture. And there was even your organization is founded for specifically quite a clear goal. Could you continue on this, please?
Yeah, we're InvestNL. We're the public investment fund. So our only goal is to make those investments which have the highest impact. But even then, we have to do good. But even then, there are consequences to your actions, and you also get some negative externalities, like the other people spoke about. So it's inevitable that there's also a negative consequence of you trying to do good. So I think our main message is try to do good, but accept you're doing also a little bit bad, and get the good things as big as possible and the bad things as small as possible.
And what are themes or topics you really focus on that want you to increase as much as you can, and one of the other ones?
Yeah, our main goals are the big transition areas, so the climate change and the circular economy. And within those fields, we call them the curve benders. So what are the cases in which we can really have the curve of the emissions really getting down? But it's a hard job to find those cases. There are not many around. You're also looking for consumers who are willing to pay a premium for certain goods.
Thanks. We had a discussion, and would you please help us out? Because usually questions you get with the science are about what you think or what you do. This time this question is, and if hopefully they're kind enough to put it on the screen, is basically if you see what's happening in the market, do you think usually investors measure their impact only from the impact portfolios, or do they usually measure their impact for the whole portfolio? What do you think? And maybe the question can come up to the screen, but if not, if you think in the industry standard these days is that we measure the impact of your whole portfolio, please use the blue sign, and otherwise use the green sign. So green is only for the green portfolios, or blue for everything? What do you think is common these days?
Blue is only part, and amber.
Oh, they changed the colors. The blue is green. I hopefully you are also a bit colorblind. With more males in the audience, that's also a slightly higher chance. But only in the green portfolio is blue. And thanks for noticing. And red for in the whole portfolio. So I see a lot of blue. A few for the wall go for the whole. So basically, we only measure our impact usually for a very specific part of a portfolio. And if you invest in just the average companies, you have also that impact. So that's interesting. I think we have, as an industry, quite some work to do on this. Sorry. I was wondering, what are the impacts you worry about most? We are sorry about climate change, but there are many things that can keep you awake at night. Mariette, what keeps you awake at night from this perspective?
Well, I think we all here acknowledge the importance of tackling climate change and tackling the loss of biodiversity. And what really keeps me awake, what I worry about is, I work for more than 20 years now in sustainable investing, impact investing. And more than, I think 15 years ago, it was said, well, within 10 years, investing will all be sustainable. Well, that is really not the case. So we really need to shift capital of the financial sector to real impact investing, real sustainable investing. And I think that really goes slow. And in my opinion, it should go faster. And yeah, that's what I worry about. And when I wake up in the morning, as an impact investor, we really try to realize impact with our investments and also positive impact and work on that. And with the investments that have a negative impact to bring that lower and show that it is also possible. So when I wake up in the morning, that's what I want to work on. And it gives me energy also to do that. But yeah, it worries me a bit that it doesn't go faster. But maybe I'm a bit impatient.
I know you're a very kind person, but if I may try to summarize it more bluntly, in this audience, and we as well, we all work in the investment industry as asset managers, asset owners, all kinds of perspectives. And basically, we just simply don't work fast enough, so we have to do better. I was wondering, what you named a few specific topics, but also from the process. Remke, what does keep you awake at night in this perspective?
Well, when we talk about negative externalities, mostly how do I get this past our impact engineers? Because we have some great people working at our company, and all they do is measure what are all the impacts of a case. And if they tell me it's okay, so I can sleep again. But the big trouble is, of course, how can I find the big positive impact cases?
So basically, what keeps them awake at night keeps you awake at night. What does them what keeps them awake at night?
Getting the company data. So we're really urging people who knock on our door and want an investment. What's the complete life cycle of your actions? It even gives them insights. Sometimes on the positive side, sometimes on the negative side. And what are the policy fields we can act in which we ensure that impact is positive enough? Do we have all the information we need? That's a big trouble for us.
Okay, so having all the information.
No, yeah, I was just also thinking. Yeah? How much data do you need? Sometimes you can also already make a judgment what also the negative externalities are. If you invest in it's probably not in your case, but in a company that is active in chemicals or produces virgin plastics, you can already realize that it has negative externalities. So I wonder if we always have to wait for all the data. Because a lot of things, if you know your investments and you really dive into it, you can already understand some of the externalities up front and also the positive impact it may have, I think.
Yeah, maybe to add, I'm an environmental scientist by trade, so a lot of my study went on externalities and how do you measure them. And for me, I think negative externalities are sort of perpetuum mobile. They exist in theory, but in practice they do not exist because they reached the boundaries of physics. So every nice, iconic impact project or investment has negative externalities. A beautiful windmill farm has negative externalities on environment, people who were living there. Microcredit, we also know, can have negative consequences. So if we don't find negative externalities, we maybe haven't searched enough. And I think the good thing is we have already several defense mechanisms in place in responsible investment. We have exclusion criteria which exclude certain sectors. We have IFC project standards. We have ESG data. So we are not starting from scratch to address externalities. But what maybe would be my plea is that for the third line of defense, we need to invest a bit more. And that is that you can have all the data, you can translate data into information, but it's not necessarily inside. And now it's getting a bit long, but I will come to the point with an example that is just next door. have you seen, there was a shop of Tony Chocolonely who sells slavery-free chocolate. And we had a discussion with them and several larger chocolate manufacturers about a living wage in the chocolate industry, which is pretty good. It's much necessary. But suddenly we had a debate that if you raise the wages and the price for cocoa too high, people will leave their job as a teacher, which we all need, to be a cocoa farmer. So, and I think that was a sort of insight you only get when you have a true insight in the industry, what you're doing. And I think as investors, we should truly invest in that knowledge, but we should also be really open to partner with academics, with NGOs that maybe are already working for decades in a specific field and know already which externalities exist. So this is also a plea for partnerships, and also after this conference, go out and talk to a lot of people who have already a lot of insights and can help us as an industry to move on this topic.
As some may know me from the pension fund agreements, I can only applaud to this one because you can't fix things alone. And I think, we had a conversation before, and you saw your writing, so you had probably some extra ideas. I'm really curious how you see what does keep you awake at night.
Indeed, one of the, but it's kind of the way forward is the point of collaboration. One thing that keeps me awake at night is I read this report a year ago, and it said the only thing more dangerous in sustainable investing than the lack of progress is the illusion of it. And I think back to the beautiful CSR reports, we are so keen to make progress. You're so keen to report all the good things you're doing. Ultimately, everybody is well-intended. Everybody wants to contribute to the solution. And so in this big drive to move the needle, we kid ourselves into an illusion of progress. That's what keeps me awake at night. And that's kind of what brings back also what you were just saying, from data to insight to wisdom, to really understand what is your intention, back to the point we've had earlier, where are you trying to go, but then also if somebody reports on their dilemmas, on the shortcomings of their framework, how much trust that inspires. And I think it's about learning to have an honest conversation in which we turn up vulnerable and forgiving towards each other, to understand it's not simple. Well, actually, it's very simple. It's just not easy to get it done. So, I mean, that's also my point of looking at the bright side of things. I think everybody is well-intended. Everybody wants to contribute to it. We just get lost in expectations and reporting and data points. So finding each other, collaborating, sharing our insights, sharing our dilemmas, is what then allows me to go to sleep at night.
Yeah, sharing is caring, and also the way to hell is paved with good intentions. So check them, ask for friends and organizations that can help you out. We talked for quite a while already, and asked you something to do which is not completely conventional, I guess. But I think we stop here for a few minutes, for 3 minutes, and ask you to have a conversation on your table, at your tables, about the biggest negative impact you usually don't find in reports. And in 3 minutes, I'll ask a few tables what they think is the biggest negative impact you usually don't find in the CSR reports of investee companies, also in asset managers. I'm really curious what you think. So the 3 minutes are now, and I'll go back to you in 3 minutes. Can I switch on? Okay. Of course, they were so kind at Felix Capital to walk down, but I think it's more active, and I just jump in. And so, would you please? I'm really happy with the step forward with your answers, and please be concise. What do you think?
Well, I think it's social impact because as long as it doesn't matter how much a company invests, in any community, as long as the people of that community cannot articulate how it affects their daily lives, it doesn't mean anything. So the social impact is important.
We ignore social impact because it's not easy to measure. You definitely. There are multiple best answers. Can I ask you?
We were talking about the smallholder farmers and how the unfair pricing reaches them throughout the value chain. So it's very similar to Mrs. Mandela's answer. So that's not reported, yeah.
Thanks. See some agreement here. I just go to this table. Can I ask you, someone, what was your...
I think we mentioned two subjects. I mentioned biodiversity, in that a lot of companies start reporting on it, but often the definition is very narrow. And then we discussed that most of the times we only get gross positive impact, and we have no idea what the actual negative impact is.
Great. I'll just one last table, and thank you also for allowing me to just break out that chair for a second and be more active. I'll go to you. There's somebody from this table? Sir?
Well, you just said the same about the small farmers, and also that it's hard to know what you don't know. So that it's important to ask the question at the end of the report, are all externalities in the report, or should we look broader?
Great. So basically, the final one, because it's really short.
Very quickly. We also thought, that especially true for emerging markets, most companies don't have a theory of change. They just focus on servicing their clients, their products, and whatever they can build. So that having a theory of change against, and that can measure something against that just simply doesn't exist.
Great. Thanks. Can I give this one to you? Or? So, thanks that I was allowed to break out of the stage. The thing is, usually we talk about things that are easy to measure, and sometimes the question is not what can I measure easily, but what's relevant. And sometimes that's our difficult questions, because as the Tony Chocolonely example you gave, we don't sometimes know what's the impact around because we don't live there. So, and biodiversity, as ASN and many others were working on, is very difficult to measure. So, but it doesn't say it isn't important or you shouldn't start. So thanks for that. You want to add something on what the audience said?
I could not hear everything that well.
I heard biodiversity, smallholders, social impact, especially in local communities.
I completely agree, because that's something we face as well. When we try to measure the impact we have, we need also impact data from our investments, and it's there are discussions about methodologies and what information is needed. So that is indeed a challenge, and that's what we see as well. So there is more information needed, but then I come back to the point that I made before. If you really know your investment, just include when selecting investments, and also in discussions with companies, also the example Tony Chocolonely, to include climate change, include biodiversity topics, include human rights. And that's already a way to mitigate a lot of negative externalities. And then, of course, you have to start measuring and monitoring, and with the best data, the best way you can. And that really already helps. And it also helps then again to ask the right questions to your investments. And it might also help them again to produce better data, or data investors need, because that's also then a thing. So it's still challenging.
Yeah, it's challenging, and you already make a bridge to the next part, because we had heard quite a lot of challenges, and it's difficult, and you don't know what you don't know, so that's an unknown, which makes it difficult. How to get some energy and start? Esther, we had a conversation on what keeps you awake at night. We had some quite serious topics. How do you arrive at work and still start and making change? How do you do that? Where do you start?
How do you eat an elephant? One bite at a time. No, I think there's tremendous opportunities in the work we do. And again, we spoke a little bit about collaboration. And I do think that we can compete on fees and performance and client servicing. But sustainability and positive outcomes is something we need to collaborate on. I think it needs to be a pre-competitive issue. Now that said, there's very deep impact to be achieved in the illiquid markets and in emerging markets. There's a lot of kind of more liquid impact, you could argue, more scalable impact to be achieved in listed investments. And I'm thinking, let's learn to speak the language of our audience. And often we see CFOs as bottlenecks of speaking about true impact. And maybe it's not possible everywhere, but thinking about, and you may be aware of the framework of impact-weighted accounts framework. So a framework that tries to monetize impacts, that tries to assign a monetary value to hours of training and to ecosystem services. Of course, there are issue areas that are complicated and a moral dilemma to assign a price tag on, such as loss of dignity. I don't think you can put a price tag on something like that. But there are impacts that are maybe measurable in monetary units. And by us learning to speak the language of the decision makers often and help them see the even monetary value of the negative externalities, puts the discussion on the agenda. So I think it's also about let's experiment with what is it that would resonate with the other side to accelerate progress.
And you usually put the monetary account basically on what it means for the company or for the stakeholders?
So it's the stakeholders.
Stakeholders, okay. I know Van Lanschot Kempen invests in many strategies, but quite a lot of also listed products. I can imagine InvestNL has a totally different situation where you can really pick and choose and very. How do you see this? Where do you start?
Well, we can pick and choose, but also we have to invest our money as well. We have this chance now to get 2 billion assets under management in really those sectors which really have a transition possibility. So if we don't do it, there's a chance wasted. But 2 billion sounds like a lot, but it's still a little drip on what is needed for the energy transition and for the circular economy. So we're really looking for those collaborations in which we don't have our own highest impact, but the highest impact as a sector and even nation and a world as a whole. And that's the big challenge, but also which gives a lot of energy, of course, because how nice is it to work on such beautiful subjects?
So basically by choosing very specifically, you try not only to make that company perform well, but also getting a sector developing.
Yeah, and where can we partner up with the other, sometimes even bigger parties, and get them into that transition as well, and really get the big money flowing.
And partnering up is something I heard earlier. Would you elaborate on that one?
Maybe want to elaborate a little bit on the positive side, because I think with negative externalities, it's like going to the dentist. I don't know how it is for you. I'm not a big fan of it because, well, you don't know which message you're going to get. So identifying negative externalities are not fun. You have to be really open. You have to be vulnerable in a sense. But I think the positive, and the analogy with the dentist stops, addressing negative externalities is actually quite fun. So
You can even make a profession out of it.
Yeah, so it is identifying them is not nice. Going public is not nice, but addressing them is fun and important. And to give an example, we had a sort of engagement meeting with fast food companies. They normally don't fall in the bucket of impact investments, but let's, for the sake of the example. And we had the conversation that they were reporting on their waste, but not on their waste from takeaways. And we asked, hey, so how much % of the waste streams are related to takeaways? It's 30%. So we had the conversation, so 30% you're just not accounting for in your CSR report. Yes, so that was a sort of a difficult conversation. But if you shift that conversation, so what can you do to address this waste? How can you make sure that you get more topics that are biodegradable? How can you make sure that you use less material? Then you see that even negative externalities can be solved, and that the impact reducing negative externalities in the sum is the same as enlarging your positive impact. So I think identifying is difficult, addressing them is also fun, and that makes me a little bit more optimistic that hopefully we will do this more in the long run.
Thanks.
Yeah, if I can add, I completely agree. And if you know the negative, if you are aware of the negative impacts or the negative externalities, that's something you can use to bring in the conversation with companies and also challenge them to improve and bring down the negative impacts of your investment. So it's really, really key indeed.
Just maybe framing the conversation, right? I think also bringing to the companies the appreciation of what they've done, the progress they've done. So how great that you've reported on the 70%. Let's tackle this. So it's also how you frame it and make it also an engaging exercise for them.
And there are many examples of collaboration and working together on this. For instance, Platform Living Wage, the pension fund agreement, and many others. Could you maybe share something on the...
Yeah, if I may, as said, we started publishing the negative impact of our investments in 2007. And we developed the methodology, and then at a certain point we thought, well, it should not be our own methodology, so we invited other financial institutions to join us, and that resulted in the platform Carbon Accounting Financials, and which is now a standard that is used worldwide. And that, I think, is a very good example of collaboration in the financial sector. And we have also one on biodiversity and also one on living wage, and also using the experience and the knowledge of the academic world, of NGOs, and the platform Living Wage is a very good example of that. And work together on a methodology to calculate negative, but also the positive impact, because that's the next step. And that's what we are also working on internally at ASN Impact Investors. And also improve it and together, so that it can be also used by the whole sector and accepted by the whole sector.
And this basically really connects with what Remco earlier said, that we all have our own skill and mandate, but you can always think of a theory of change where can I make a difference? And ASM will not make the biggest difference when it comes to AUM, but you can make the theory of change with Platform Living Wage, just getting money on board. While Van Osmond Camp has a different size and different opportunities, and we all have our own theory of, we can all make our own theory of change which suits us, and we can help. Personally, I think it's wonderful that with so many initiatives where investors, small and big and everything in between, can work together. I'm really enthusiastic at, for instance, the Platform Living Wage, but also the pension fund agreement as named earlier. And if you look to the ACM in the Netherlands, you're allowed to work together even as competitors, because as Esther already said, you compete on the front end, but if you own the same shares and you live in the same world, we all have the same interest on getting things right. We thought, anything to add on this, or before I go home? I just want to look at you because we thought quite a lot. I promise I won't run into the room again, so don't worry. But I was wondering, are there any questions from the audience already? And don't be shy. As I promise, I don't run off the stage right now. No questions? It's a bit early, I can imagine, but... yeah, I don't see, but please run with the microphone to the person. Okay, great.
I was just wondering, we're talking a lot about data and lack of frameworks and not knowing the unknown. That's all fair. Just curious, what do panel members think about all the aids that the emerging regulation has offered us to evaluate doing no significant harm and similar concepts? Is it really helpful in evaluating these externalities?
Could you please say your name and institution? And your question was about which kind of aid does help with unknown unknowns?
Does regulation help to guide us in evaluating the right type of externalities? And my name is Svetlana Rodianova from APG.
Thanks. Due to the light, I can only see half of the room, actually, to be honest. Yeah. Someone would like to react? Does regulation help?
I think we should have a separate panel on the regulation. But I think you raise a very valid point there. I deeply believe that the regulation is very well intended. And what we see happens as a consequence is we struggle with our own definitions, with our own operationalization of certain definitions. And that's when you run the risk of what people say, hitting the target and missing the point. So you just get so obsessed with data points and performing well on the data point that the actual real world outcome gets lost from sight. It can also be done well, but I just observe many of us are trying to navigate it, and sometimes maybe we don't make the best choices of where we put our attention.
And do you already have a bumper sticker with CSRD and SFDR?
Now, I'm a big fan of the CSDDD. I'm really happy that it passed. And to give an example, we have been engaging with the pharmaceutical sector, also on the human rights impacts of patents and licensing. And that has always been a very difficult conversation. But now suddenly with the CSDDD coming up, companies need to have, in a structured way, assess what the human rights impacts are of their products, but maybe also of the patents and the pricing policies. So I'm a big fan of regulation, but I fully agree, it's not a substitute for real insights. You can be compliant, but you can still be ignorant about the negative externalities. So yes, it helps, but you should do your homework and build your expertise as well.
Regulation, do you love it?
I completely agree. I think, the CSDDD, as you say, is really, really relevant. We also already tried to include the whole supply chain in our analysis of companies, and that really is a challenge. So companies really need to also take the responsibility themselves, and I think this really, really helps. And yeah, with the SFDR regulation, I think it can also be seen as a burden, but it also helps you to ask the right questions again about your own processes and challenge you internally. So I think it does add value. On the other hand, I would like to see that also investors that don't have a sustainable or impact focus would also be challenged to report more on it.
Yeah, to us, many of those regulations aren't helpful in the sense that they have a minimum level or they're so broadly set up. They really don't have the focus we need on really reaching those positive impact cases. So most of them, we use them as a minimum standard and make our own impact policies and analysis, helped by our wonderful team of impact engineers really insightful in making the most of them.
Earlier, you mentioned the curve benders, which I thought was a very good term. I noted it down. I'm going to quote you on it. But it's also kind of looking at the regulation and reporting as a snapshot of what is or what has happened, whereas the transition we need to undergo is much more the pathways and what are the commitments and what are the targets and how are we moving towards them. And that's, for now, not sufficiently reflected in all the disclosures we need to provide. So there's that mismatch of the direction of travel, which we take into account for our investments, but the more backward-looking mirror, which we still need to apply for reporting.
Yeah. Personally, it's always easy to mock about regulation because it's lots of work, and it's stupid that SFDR started earlier than CSRD, which makes it difficult. But in the end, if we didn't want to have regulation, we as a sector had to perform better. So if we don't want more further regulation, just do what you need to do. And I think one underestimated aspect of regulation is we now have to have knowledge of the value chains behind things. And I think that's also very convenient for strategic analysis, especially in this geopolitical difficult world. It's good to know your value chains anyway, so you should do your homework anyway. It's but never fun to be you have to. It's always better when you think I like to do. But that stage we passed. As a sector we didn't perform, so now we are here where we are today. Any other questions from the audience? And I'll try to see you, but otherwise stand up, wave. Yeah, just there in the middle back.
Hi, Joost Nootsboom, Omnes Capital. I reflected on a comment from Pete earlier on negative impacts boomeranging back as ESG risk. And I wonder how the panel reflects on the trends between more niche-focused thematic investing and more broad index-based investing as sort of large universal owners of equities.
I just missed the first half of your sentence. And ESG risks. Could you please repeat the first bit?
So Piet Klop had a very nice quote on negative impact being boomeranged back as ESG risk, especially for large universal owner investors like some people on the panel. And I wonder how you reflect on what was earlier said on know your investment and how that works if you are sort of a broad-based index investor, passive investor with thousands of companies.
Thanks. So the universal owner perspective, where do you get it back?
Ooh, it's a really nice question and also a difficult question. So thank you. I think it's both necessary. So I think you can not only assess your negative externalities, but also your positive externalities if you do several levels of analysis. What could work on the micro scale, for example, pay cocoa farmers a higher wage, might have a negative impact on the sort of higher skill level that people transit from being a teacher to a cocoa farmer, and people do not have education. So I think, I don't know if it's an answer, but I think if we truly want to know what our positive and our negative impacts are, we need all these several levels of analysis. And you do not address it sufficiently by only focusing on data and only focusing on information. You need to build your own expertise, you need to build your own insights, you need to build your own partnerships to truly understand that.
Well, I think our own funds are really actively managed, more concentrated funds, and there you do the in-depth analysis. And then, of course, on behalf of clients, would select funds that are much more passive or following an index. And I think there, kind of the setup, the sustainability expectations up front are of critical importance. And again, it's maybe more the active ownership of also carrying out, make sure that the voting is carried out in line with your beliefs, and there's an engagement overlay. So it's about how you set up the requirements up front for more passive solutions, I believe.
Yeah, I don't have much to add.
Okay,
It's really...
that's fine. We can check for another question of the audience. Raise your hand. Don't be shy. Otherwise, I had a question, and I was wondering, imagine that Phenix Capital invites us in 5 years' time to do this panel. What are the topics do you think we should are addressing at that time, if you turn a time machine?
5 years ahead.
5 years ahead. Looking back is always easier.
Yeah, well, I must say, I've already seen the last 5 years, or at least the last few years, more investment opportunities, more investment opportunities that are in balance with nature or working towards that. So I expect within 5 years, because I really see the trend that these opportunities had the possibility to grow, and hopefully that, and we as investors have a role to take in that. So to shift the capital towards the real opportunities, the investments that do take climate change, biodiversity and human rights into account and work on real positive impact. So I hope that will happen, and these opportunities have grown and are the big companies to come.
I also expect that in the next 5 years, someone mentioned that earlier this morning at the breakfast, how technological advancements are going to be at a scale that we cannot fathom right now, just like we couldn't fathom 5 years ago where we'll be today. And it's all about making sure that these are scalable and there's sufficient capital flowing into this. So I don't really have a terrible doom vision.
You look on the bright side, luckily. Any other thing to add?
Well, I hope that in 5 years, Mariette had some great examples in which the sector worked together on what are the positive impact areas and how can we manage the negative impact. I hope in 5 years, or even next year, we say to each other, well, we fully collaborate on our data, our policies, on how to handle negative impacts. And it all started here today in the Beurs van Berlage, in which we talked about our things that keep us awake and what gives us energy. And we reach out to each other and collaborate from now on.
Thanks. I think we have to wrap up. There's a final call from, you want to say, give something to the audience before we walk away?
And I'm still thinking about the dentist, like it's not nice to identify your negative externalities, but there's also something also related to the dentist. Sometimes it's not nice to say, maybe I don't know yet. That's also a sort of dentist moment. You don't like to say it, you don't like to do it, but it opens up. So I think in martial arts you have to turn beginner's mind. So even if you have trained for 30 years in a topic, you should still train like you're a beginner and question everything. And I think for us as impact investors, that beginner's mind helps us. It helps us to address one of the really difficult questions: at what level would you need to address it? And I think the fair question is, we know some, but we certainly do not know everything. And we can only solve that if we work together with NGOs, academics, with partnerships. So when I see this hall or this audience in 5 years, I hope and I think it will be much, much larger, and there will be far more connections between investors, but also between stakeholders, experts, academics, and NGOs.
Thanks. Okay, for wrap up, our final call. Okay. I hope you don't leave the room depressed and otherwise read the CSR report. From a more serious perspective, we all have an impact on the real world, and think about your theory of change, as some already mentioned, and we all have possibilities to do it. And my question to you is, think when you leave the room or during the breaks, think about what is one thing you could start with today, and it can be small. Don't underestimate the value of a small thing if we do it step by step. And personally, we often compete, and that's fine, and that's something we sometimes also gets the best out of us. But on the other hand, we own quite often the same stocks, the same companies, we own the same investments quite often. We breathe the same air, so then collaboration is key, and find logical ways to collaborate and scale up investments. And you can, if you're a small investor with like in ASN, you can scale up platform living ways to over 1,000 billion, and even more. And many of us are active in these platforms, and these things help enormously. So thank you very much, and hope you stay here for today and be inspired. And thanks for the great team I had to work with, and also Naomi and Phenix Capital for the preparation. And thank you, audience.